Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings, and today we're diving deep into Atlas Critical Minerals Corporation's latest SEC filing. It looks like they're gearing up for a big public offering, but as always, there is a lot more beneath the surface than meets the eye. Are they sitting on a goldmine of opportunity, or are they facing a mountain of risk? Let's find out. Atlas Critical Minerals Corporation, or ATCX as they're aiming to be known on the Nasdaq, is trying to raise a significant amount of money. They're offering 800,000 shares of common stock, expecting to get around $10 per S-share, which could bring in roughly $7.2 million after fees. They're also hoping to list on the Nasdaq Capital Market soon, a big step up from their current OTCQB trading. This filing is essentially their big pitch to investors, explaining who they are, what they own, and why you should trust them with your money. So, who are Atlas Critical Minerals? They're a company exploring for critical minerals like rare earths, graphite, titanium, copper, and nickel, mostly in Brazil. Think of these as the building blocks for the clean energy and high-tech industries of the future materials, for electric cars, wind turbines, and advanced electronics. They also have some other mining projects for iron, gold, and even diamonds, plus a quartzite operation that is currently their only source of revenue. But here is the kicker. Like many exploration companies, they've been burning through cash. They've incurred losses since they started, with a big accumulated deficit of over $9 million by the end of 2024. This immediately raises a question: can they keep the lights on long enough to make these projects profitable? Now, they are very upfront about the risks, and there are a lot of them. They've got substantial doubt about their ability to continue as a going concern, which is a fancy way of saying their survival without more money is shaky. They're an exploration stage company, meaning they haven't found a commercially viable mineral deposit yet, and there is no guarantee they ever will. Explorations are expensive, and most don't pan out. Plus, they rely heavily on capital markets for funding. Essentially, if they can't get more investment, their plans fall apart. And that is not even touching on the general risks of mining, like fluctuating mineral prices, environmental regulations, and political instability in Brazil. Even their stock price is expected to be volatile, which is a polite way of saying it could swing wildly. Let's look at the numbers to see what is really happening. For the 6 months ending the 30th of June 2025, their revenue was tiny, just over $56,000. Compare that to the same period in 2024 when they had over $357,000 in revenue. That significant drop happened because their quartzite operation, their only revenue source, had to pause production in April 2025 for operational upgrades. They expect to restart by the end of 2025. Their net loss for this period was almost $2.8 million, a big jump from the $525,000 loss in the first half of 2024. This increase in loss is largely due to higher general and administrative costs, including more spending on staff and third-party services for exploration activities, plus a huge spike in stock-based compensation. For the whole year 2024, they did bring in over $667,000 in revenue from quartzite, which is good, but their operating expenses were over $1.9 million, leading to a net loss of about $1.7 million. It is clear they're still a long way from profitability. They've got a lot of mineral rights spread across Brazil, focusing on rare earths, graphite, titanium, copper, and nickel. The company is particularly excited about their rare earths and titanium projects in the Alto Paranaíba region, citing promising surface samples with good grades of rare earth oxides and titanium dioxide. They even have mineral rights bordering those of competitors like Resoro Strategic Metals and Equinox Resources Limited, suggesting they're in areas with known potential. They've mapped out detailed exploration plans for these projects with specific costs, like a 4,000-meter drilling campaign for their Malakashita graphite project, estimated to cost nearly $1 million. A significant part of their future strategy involves an option to buy a subsidiary from Atlas Lithium Corporation, which is also heavily influenced by their CEO Mark Fogasser. This option could add 60 more mineral rights to their portfolio. The catch is they might have to pay $8 million for it, and whether that is in cash or stock could heavily dilute existing shareholders. It is a big move that could boost their resources, but also carries substantial financial risk. Speaking of Mark Fogasser, he is a major player. He is not just the CEO and chairman of Atlas Critical Minerals, but also of Atlas Lithium, a related company that owns a significant chunk of Atlas Critical Minerals. Because of his series of convertible preferred stock, he holds practically all the voting power, around 80% before the offering and still a dominant 74% after. This makes Atlas Critical Minerals a controlled company, as they put it, meaning one person has a lot of sway over decisions, which can be both good for decisive leadership and risky if his interests don't align with other shareholders. Atlas Lithium itself is also a significant shareholder, reinforcing the close ties. Looking at their capitalization table, even after the proposed offering, they're still showing a substantial accumulated deficit. The pro forma, as adjusted numbers, show a healthy boost in cash and equity after the offering, but the underlying deficit remains. This highlights that while the offering brings in much needed cash, it doesn't erase their historical losses. And for new investors, dilution is a big deal here. They openly admit that the offering price of $10 per S-share is significantly higher than their net tangible book value per S-share. This means you'll experience immediate dilution, paying a premium that is much higher than the book value of the company's assets per share. They estimate immediate dilution of $7.81 per share for new investors, meaning for every $10 share you buy, you're essentially paying about $7.81 more than the underlying tangible book value. The business overview paints a picture of a company with a diverse portfolio of critical minerals, all in the early stages of exploration. Their quartzite operation, though paused, brought in some revenue in 2024, but the real story is the potential of these critical minerals, especially in a world increasingly focused on clean energy. They're betting big on these resources, despite the long road ahead and the significant capital required. The leadership team is quite experienced, especially in mining and finance, with impressive educational backgrounds. However, a notable point is that several executives and directors also have roles at Atlas Lithium, a related party. This creates potential conflicts of interest as they have to balance loyalties and time between both companies. While they emphasize acting in good faith, it is something to keep an eye on. So, what is the verdict on Atlas Critical Minerals? They're a company with a compelling vision tapping into the critical minerals needed for our future. They have promising exploration targets, especially in rare earths and graphite, and a clear strategy outlined for advancing these projects. The proposed public offering and Nasdaq listing are positive steps towards securing the capital they desperately need. However, the financial picture is grim right now. They're burning through cash, have a significant accumulated deficit, and their survival hinges on future funding and the successful discovery and development of profitable mineral deposits. The risks are substantial, as they themselves admit, and the dilution for new investors is significant. It is a high-risk, high-reward scenario. If they hit it big with these critical minerals, the payoff could be massive. But the odds are stacked against them, as is often the case in junior mining exploration. They're essentially asking investors to bet on the potential of these early-stage projects, with the hope that they can navigate the financial and operational hurdles. Alright, that is our deep dive into Atlas Critical Minerals filing. What do you think about their chances? Are you buying into the critical minerals dream, or are the risks too high? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate decoding. And don't forget to join our Discord community. The link is in the description for more in-depth discussions and to connect with fellow corporate explorers. Thanks for watching, and we'll see you in the next video.